Welcome to RJ Explain Money. Market hit the record break after the Fed rally. After riding high on the US Federal Reserve dovish tone for the 3 straight session, Indian market finally took a breather today as a profit booking kicked in across a key sector. Key highlights from the today's session are: market snapped a 3 days winning streak amid the profit booking. Adani stocks surged post SEBI's clean chit on the Hindenburg allegation. IT and private banking heavyweights dragged the indices lower. PSU Bank outperformed while the private bank lagged. The broader market remained resilient with the mid-cap in green. The Indian rupee weakened by 9 paise. The gold price gained a momentum, rising 0.24%, supported by the festive demands. Next, we will look into the positive news. Today, only 2 categories outperformed. One is the Adani by the SEBI clean chit, and the second one is the PSU banking sector. First, we will look into the SEBI clean chit, which powered the Adani Group rally. The market regulator SEBI's final order on Thursday cleared Gautam Adani and his group regarding the stock manipulation allegation made by the US short seller Hindenburg Research. This development triggered a significant rally across Adani Group stocks. And the SEBI comprehensive investigation found no evidence supporting the Hindenburg claim about the accounting fraud and the stock manipulation. And this clean chit removes a major regulatory overhang that had been weighing on the Adani stocks since January 2023. Due to this news, the top gainer of the Adani stocks are Adani Power, which gained by 13.42%, followed by the Adani Total Gas, surged by 7.55%. Next, the Adani Enterprise up by 5.25%, and at last, Adani Port gained by 1.15%. Next, on the positive news, we have the PSU Bank sector outperformance. The public sector banks led the market gain, with the Nifty PSU Bank index surging 1.28%, marking the best sectoral performance. The rally reflects a renewed confidence in the PSU banking fundamental and the government support. And the related stocks which got impacted are State Bank of India gained significantly on the improved sentiment, and the other PSU bank followed the suit with a broad-based buying. Along with the PSU banking sector and Adani stock, telecom sector also showed the strength today as Bharti Airtel advanced by 0.97%, supported by the strong operational metrics and the 5G expansion plans. This telecom major continues to gain a market share in the premium segment. Next, on the negative news, we have the IT sector profit booking and the private banking weakness. Whereas on the IT sector profit booking, information technology stock witnessed a heavy selling as the investor booked profit after the recent rally triggered by the Fed rate cut. IT companies had gained significantly on expectation of improved client spending post the Fed easing. The correction appears to be a profit booking rather than the fundamental concern, with the sector still benefiting from the Fed policy. And the stock which got impacted are HCL Technology, which lost by 1.59%, Infosys fall by 0.8%, and the TCS is down by 0.6%. Next, on the negative news, we have the private banking weakness. The private sector bank faced a selling pressure amid a concern over the credit growth and the margin pressure. HDFC, ICICI and Kotak Mahindra Bank all declined as the investor preferred the PSU Bank today. The weakness reflects a relative underperformance compared to the PSU Bank rather than the fundamentals. And the stock which had fallen off, ICICI Bank fell by 1.35% and HDFC Bank declined by 1.05%, and at last the Kotak Mahindra dropped by 0.95%. Along with the private banking weakness and the IT sector, we have the retail and consumer stock which also faced a selling pressure, but this is due to the valuation concern. Trend and Titan Company, both high value stocks, declined over 1% each as investors questioned the premium valuation. Next, we will look into the global economy, and on it, first we will look into the US market. US market hit a record high post a Fed. All 3 major US index, Dow Jones, S&P 500 and Nasdaq, all gained above 0.5%. Closed at a fresh record high following the Federal Reserve's 25 bps rate cut. The Fed dovish stance with the signal of 2 more rate cuts this year boosted the risk appetite. Whereas Asian index showed the mixed performance, with the Japanese Nikkei down by 0.25% and the Hang Seng declined by 0.20%. The market took a breather after a strong rally with some profit booking in the emerging, whereas even in India we saw the same trend today. Adding to that, on Asia, the Bank of Japan maintained its benchmark rate of 0.5% but surprised the market by announcing a plan to sell ETF and REIT holdings worth $330 billion annually. and the Bank of Japan seeks a policy normalization while assessing the impact of US tariff concern and the Fed policy changes. The key catalysts that are ahead for the market are US-China trade deal and the India-US trade progress. And on this, US-China trade call is about to happen in next 1 to 2 days. The President Trump and the Chinese President Xi Jinping are scheduled to hold a crucial call on the trade negotiation. Any breakthrough could boost a global risk appetite emerging market flow, including India. Next on the catalyst, we have the India-US trade progress update, whereas the Commerce Minister Piyush Goyal indicated that the trade talk between India and the US are progressing positively with a potential tariff rollback by the November 30. Why it matters is the reduction in the US tariff to 10 to 15% could benefit a 50 billion in Indian export. And also the export-oriented sector like IT, pharma and textile could outperform. At last, I will like to close this video with a key takeaway and the risk checklist. The top 3 takeaway for today are regulatory clarity wins, sector rotation continues and the global tailwind persists. First on the regulatory clarity wins, SEBI clean sheet to Adani Group demonstrated the importance of regulatory clarity in the market confidence. And on second, we have the sector rotation continue, shift from the private banking to the PSU Bank and from the IT to the traditional sector shows the healthy market dynamics. Third is the global tailwind persist despite today's past, dovishness and the potential trade progress keep the medium-term outlook positive. Next, we will look into the risk checklist. First one is the valuation concern and the second is global uncertainty and third is currency pressure. Whereas on the valuation concern, high valuation in certain pockets may trigger a more profit booking. And second, the global uncertainty, US-China trade dynamics and the Bank of Japan policy normalization could impact the flow. And on the third, the currency pressure, the rupee weakness amid the dollar strength may affect the import-heavy sector. For today's market, I like to summarize it as today's consolidation appears healthy after the recent 3-day rally, with the global central bank easing, improving India-US trade relationship and the strong domestic institutional support. Key level to watch on the Nifty are 25,250 to 25,150 and the resistance are at 25,500. Thank you for watching the video. If you found this briefing helpful, smash the like button, share it with a fellow investor and don't forget to subscribe. I am always open to the feedback. Please provide your valuable feedback in the comments. Thank you.